Hi everyone, this is Jim Atchison. In this video, I'm going to talk about how I use moving averages and how, if used well, they will keep the wind at your back during trades. I think of charts as a visual rendering of the flow of money. I'm seeing on the screen the results of all the decisions that other traders are making in their participation in a particular stock or ETF. And when you're objectively observing their decisions, you can say, this is what I see them doing, and this is how I'm going to position myself accordingly. As a trader, it's always your goal to direct the flow of money into your account. So we want to observe and we want to recognize the direction and the intensity of price movements. And we only want to get involved when the price has clear momentum. One of the mistakes that I made early on in my trading practice was overlooking the slope of the moving averages on my charts, especially when I was watching for breakouts and breakdowns. I'd see a good setup or a chart pattern, mark the price level that needed to be broken, and then I'd jump in without paying much attention to the buildup of momentum at that point. If you're watching for a breach of an important level, and your moving average is pretty flat, don't expect the price to move up very successfully. I've learned it's a lot better in that situation to watch the breakout and then buy on the first pullback if the breakout is ultimately successful. Or it's a good idea to wait for the price to clear a higher level when you can see momentum and there's clear slope to the moving averages on the screen. The moving average that I use most often with trading momentum stocks is the 8 EMA, and I use the EMA as opposed to the SMA because an exponential moving average responds more quickly to the movements in price, so you can have more precision with your entries and your exits. Here's a chart of Goldman Sachs, GS. This is a stock that works very well with 8 EMA. It's one of my favorite stocks to trade. I have a pretty good feel for drawing the price levels and reading the patterns. And one thing that I've learned about trading is that stocks each have their own personality. So always have your eye on the ones that you know that you have a good feel for, and stay away from the ones that drive you crazy. Even if you see a good setup, it's just not worth the aggravation. There's a support level here at 160-140. And that was a major level of support showing up on the daily chart. This is a 1-hour chart that we're looking at. I always have the after hours activity up on my charts so that the price action is also reflected in the moving averages from overnight. And as you can see, the price came right down to this 160-140 level, and it appeared that some buyers were stepping in at that point. When buying on a bounce, I always wait for the price to regain and close above the 8 EMA before going long. So the 8 EMA is this blue line right here. And that way I'm not guessing where the price is going to bounce. That way I can actually see the buyers coming in with upward momentum building. So here I'm going to fast forward a bit. We see the next morning in the first hour that the price closes well above that 8 EMA, and there's really nice slope to the moving average. So that's where I'm going to go long. And your stop would be set just below the low of where the price found support. So at about 160.81. Now I'm going to ride this up as long as the price stays above the 8 EMA and the 8 EMA is sloping up. That means that we have upward momentum and there's no reason to exit the trade. One thing to note is that, let's say that I had missed the entry on that and I wanted to get in as I saw the price running up. It would be a great opportunity here to get in when the price pulled back to the 8 EMA. A lot of times the price does that. It runs up, it pulls back down a bit and finds a nice support level right around the moving average. That's where I could either add to my position or I could start a position. And since we had nice slope here, it was very unlikely that the price was just going to reverse and fail here. But if it did, you would exit the position as soon as the price closed below that 8 EMA and take a small loss. But we're going to keep on riding this up. And ultimately, we hit up to this 167.30 level. The 8 EMA flattens out there, and then we get a candle closing below it. That's my signal to exit out of the trade. Now, most likely on the way up, I'm going to be taking profits as we run through some of these resistance levels. But if you've got some or all of your position left, you're going to want to exit out once the 8 EMA is broken. It's telling us that the price direction has reversed and the momentum has reversed, and there's just no longer any reason to be in this trade. But here we held the position into the next day. There's a profit of about $3.90 from the point that we got in to the point that we lost the 8 EMA. So that gets you about $390 of profit for every 100 shares. It doesn't matter what time frame you're looking at, these principles of using a moving average like the 8 EMA can be used with the patterns that you're seeing on the chart. I was looking at the 1 hour here because it was a major price level that the price was finding support at, and it had the potential to run much farther than the movement that I would expect of a day trade. Feel free to use the comment section down below to discuss, and I'll have more videos out soon. Thanks for watching.